Most people think building wealth is about picking the perfect investment at the perfect time. They chase trends, follow hype, and jump in late, only to panic early. History tells a very different story. Welcome back to Financryp, where we focus on long-term wealth, not short-term noise. Today, we're breaking down the assets that actually outperform over time and why most people never benefit from them. Let's start with an uncomfortable truth. Wealth is rarely built through excitement. It's built through boring, consistent ownership. When you zoom out and look at decades, not months, only a few asset classes have reliably beaten inflation and built real wealth. The first is businesses. Owning businesses is the foundation of most fortunes. Businesses create value, generate cash flow, and adjust to inflation. When costs rise, businesses can raise prices. That flexibility is powerful. This is why business owners accumulate wealth faster than wage earners. They're not trading time for money. They're owning systems that produce money. For those who don't want to operate a business directly, there's another way to own them: stocks. Buying stocks means owning pieces of real companies, companies that sell products, hire people, and generate profit. Over long periods of time, broad stock markets have consistently outperformed cash and savings. Not every year, but over decades. The problem isn't stocks. The problem is behavior. Most people buy during excitement and sell during fear. Long-term investors stay invested and let compounding work. The second major outperformer is real estate. Real estate works because it combines three forces: income through rent, appreciation over time, and protection against inflation. As prices rise, rents and property values often rise as well. That makes real estate a natural inflation hedge. Real estate also allows leverage, controlling large assets with relatively little upfront capital. Used wisely, this can accelerate wealth building. The third asset class people often overlook is intellectual property. Intellectual property includes books, music, courses, software, and digital products. Once created, these assets can generate income repeatedly with minimal ongoing cost. This is why creators and builders can scale income far beyond their time. Now let's address what does not outperform over time: cash. Cash is useful for liquidity and emergencies, but it loses purchasing power over time. It protects stability, not growth. Consumer goods, cars, gadgets, and luxury items depreciate. They provide comfort, not compounding. And speculation. Chasing hype, shortcuts, or guaranteed returns usually leads to losses or stress. The pattern is clear. Assets that outperform share three traits: they produce value, they grow with time, and they benefit from compounding. Wealth isn't built by eliminating risk. It's built by understanding risk and positioning for long-term ownership. This is why the wealthy don't ask, "How much can I save?" They ask, "What can I own?" Financryp is about clarity, patience, and long-term thinking. Because in the end, wealth belongs to owners, not hoarders.